It is 8:57 a.m. Pacific Standard Time. It is the 10th day of February. This is episode 1254 of Bitcoin, and the Federal Reserve's Waller shrugs off Bitcoin volatility. That's going to be first up today here on all the news that you can use with me, your host, David Bennett, on the Bitcoin and podcast. Next, we'll talk about strategy. He said some things on CNBC's Squawk Box today, or early this morning, and we'll see if he sticks with them. And then on to South Korea. There is now an official probe, and, well, actually, I think it's more than a probe. I think it's a full-blown investigation by South Korean officials into Bithumb's fat-fingered $43 or $44 billion Bitcoin payout. I just smell something funny in the air with that. That smells more like, or less like a fat finger and more like something done on purpose. Ray Dalio is talking again. This time it's about his views on CBDCs and their privacy risks. And then Treasury yields. Treasury yields have fallen pretty sharply. I got a story here that we're going to do while we run the numbers about what the hell's going on with that. Then in the second part of the show, we've got ETFs seemingly coming back. Bitcoin ETFs seem to have some inflows going on. And while I normally do not talk about shitcoins on this show, I ran across this story about Vitalik Buterin. And I don't know if it's going to signal a switch, and I'm not. Honestly, this has nothing to do at all with Bitcoin. I'll get into it. It may be a signal that he is telegraphing that he doesn't really want to telegraph, or it may be nothing. It may be nothing, but there's something about this that smells a little desperate. So that's one of the only reasons why I'm going to bring you a story about Ether. Then we are going to talk about Tether. They are making even more inroads into strategic investments. And then on to France, where we've got another ransom kidnapping case, or at least there have been arrests in a French kidnapping ransom case about crypto. Again, it will be the reminder, don't wear swag. Don't tell people that you have Bitcoin. Just stay humble, all right? And then finally, U.S. sentences a fugitive to 20 years over a crypto scam. Again, another warning, don't be a dick. Don't steal people's money and don't go to prison. It's kind of that easy. So first up is the Federal Reserve's Waller shrugs off Bitcoin volatility, says crypto crashes don't threaten banks. You sweating a little bit there, pal? Micah Zimmerman from Bitcoin Magazine starts us off. Federal Reserve Governor Christopher Waller downplayed risks from Bitcoin and broader crypto markets on Monday, arguing that digital assets remain largely disconnected from the traditional financial system, even as the technology behind them moves into the mainstream. He was speaking at an event hosted by the Global Interdependence Center, and Waller, framed crypto markets as an extension and competition of everyday commerce rather than an entirely new phenomenon. His comments come as crypto markets continue to grapple with regulatory uncertainty in Washington and recurring bouts of volatility that have shaped investor sentiment for years. While Bitcoin has become more embedded in institutional portfolios, Waller suggested that price swings remain part of markets' character rather than a systemic concern. Quote, ups and downs in the crypto world have become so common, they actually have a name for them. Winters. It's part of the game, he said. Waller dismissed recent declines in Bitcoin's price as less dramatic when viewed through a longer lens, noting that levels once considered extraordinary are now treated as routine. Quote, people like, oh my God, Bitcoin's down to 63,000, he said. Quote, 8 years ago, if you had just said it was 10,000, you would have said, oh my God, this is crazy. It's like talking to my daughter. Oh my God. OMG. Waller should have just said OMG. My drip is fire, bitches. Okay, whatever, dude. All right, so on to this one. Yeah, okay. The Fed governor also pushed back against the idea that crypto volatility poses some immediate threat to banks or even the broader payment system. In his view, crypto remains separate and can experience sharp crashes without triggering spillovers into traditional finance. Quote, these things are pretty detached, from the traditional finance world. You can have these big crashes and move volume. The rest of us wake up and we're fine the next day. Nothing bad's going on. The banks are open. Your payments are being made, end quote. Waller said he does not closely monitor crypto markets as part of his day-to-day responsibilities at the central bank, describing the sector as still outside the core of the financial system. Quote, the banks are open. Your payments are being made, he said. Yes, I know. We already read that. Why did you put it in here twice? Oh, well. Early on in his talk, Waller compared a typical blockchain transaction to buying an apple at the grocery store with different objects and different rails, but the same basic structure of payment execution and record keeping. Quote, if we decentralized or in the decentralized crypto world, a crypto asset or digital asset is the object that people want to buy, Waller said, pointing to Bitcoin and other tokens. The transaction, he argued, relied on new technologies such as blockchains, tokenization, and smart contracts, which he described as tools rather than threats. Quote, those are just technologies. There's nothing dangerous about them. There's nothing to be afraid of, Waller said. This is just a little bizarre. I kind of trying to figure out where he's going with all this, but at the same time, Waller acknowledged that crypto markets have begun to intersect more with mainstream finance, particularly as traditional firms explore blockchain infrastructure. He pointed to efforts by financial institutions and even the U.S. Treasury to consider tokenized securities trading that could operate around the clock. The ability to support 24/7 global trading, he said, represents one of the key innovations of blockchain-based systems compared with legacy banking infrastructure built around business hours and slower clearing cycles. Quote, these technologies were built to do this globally, 24 hours a day, 7 days a week from the beginning. They're not legacy systems, Waller said. He argued that this constant trading and settlement capability is already forcing traditional financial institutions to improve their own payment systems, especially in cross-border transfers where crypto rails can move value without relying on any established networks. Quote, they are forcing the big banks, everybody else, to sort of make their payments, especially across borders, faster and cheaper, he said. Waller then highlighted the need for clearer regulatory definitions around digital assets, including whether various tokens should be treated as securities or commodities. He said that responsibility lies with Congress, the Securities and Exchange Commission, and the Commodities Futures Trading Commission. Quote, the bigger problem is clarity. Everybody thought clarity would come in that would clear the road. It doesn't look like it's going anywhere anytime soon, Waller said, adding that progress in Congress appears to be stalled. Waller suggested that some of the recent cooling in crypto market enthusiasm reflects fading expectations that sweeping legislation would arrive quickly. Quote, the lack of passing of the Clarity Act has kind of put people off. While Waller emphasized that Bitcoin and speculative crypto assets are not as focused as a central banker, he offered blunt advice to investors navigating the sector's volatility. Quote, prices go up. Prices go down. If you don't like it, don't get in. Ladies and gentlemen, one of your Fed chair people, Fred Waller, or whatever his name is, it's just, this is ridiculous. It literally is like talking to one of my daughter's high school friends. It's just, I'm kind of amazed. So let's peel it apart just a little bit. He seems to not be attacking crypto, and he's not on crypto's side. He seems to like Bitcoin, but is standoffish about the whole sector. What I find fascinating beyond that, which actually that's not fascinating, that's sort of like milquetoast response to all the stuff that's going on, is he keeps reiterating that banks are still open, payments are still being made. It doesn't affect him. He's trying to separate these two worlds, and yet he keeps having to acknowledge that these two worlds are colliding. You know, Bitcoin does all this stuff faster, and it does it across borders, and it doesn't need any of this legacy bullshit. And yet here he goes with, but the banks are still open. And then he'll go on to say, and Bitcoin works 24 hours a day, 7 days a week. And that's how it was designed from its inception. And that's forcing banks to do X, Y, and Z. But the banks are still open. We're separate from all this. This honestly sounds like somebody who is either unwilling to do anything but sit squarely on top of the fence, or he is very, very confused about everything. In either case, I have no confidence in this guy. I have no confidence in this Fed chair or chairperson or whatever you want to call him, Waller. He said it's like a whole article of him basically saying, yeah, this and that, and maybe, but then again, and if you don't like it, don't get into the market. And this is one of the governors, not chair people, we'll just call them governors of the Federal Reserve. Kind of scary when you think about it. But strategy is not selling. We're not selling. Michael Saylor doubles down on Bitcoin buys. Micah Zimmerman, Bitcoin Magazine, says Michael Saylor defended Strategy's Bitcoin buying approach on CNBC Squawk Box earlier today, dismissing concerns that the company could be forced to sell its holdings during a prolonged downturn and reiterating plans to keep adding Bitcoin on a regular schedule. Quote, we're not going to be selling. We're going to be buying Bitcoin, Saylor said. Quote, I expect we'll buy Bitcoin every quarter forever, end quote. Saylor pushed back against speculation within parts of the Bitcoin community that Strategy's leverage and cash position could create pressure to liquidate if prices remain depressed. He called those fears misplaced, arguing the company has structured its balance sheet to withstand such volatility. Quote, that's just an unfounded concern, Saylor said, pointing to what he described as conservative leverage relative to typical investment-grade companies and significant liquidity coverage. He said Strategy holds enough cash to cover dividend and debt obligations for roughly 2.5 years. The comments come as Bitcoin's market faced renewed swings following a pullback from recent highs. Saylor framed Bitcoin's volatility as inherent to what he called digital capital, arguing that the asset remains structurally more volatile than traditional stores of value such as gold, equities, and real estate. He said that over longer time horizons, Bitcoin has outperformed other capital assets and should be viewed through a multi-year lens rather than short-term price moves. Quote, if you've got a time horizon of less than 4 years, you're not really a capital investor, he said, adding that traders may benefit from price swings while long-term investors focus on performance over 4-year cycles. Pressed by host Andrew Ross Sorkin on what would happen if Bitcoin fell sharply and remained lower for years, Saylor said Strategy could refinance debt rather than sell the Bitcoin. He argued that lenders would continue to provide financing because Bitcoin retains value despite drawdowns. Saylor also said the company's equity is designed to amplify Bitcoin's moves, rising faster during rallies and falling harder during declines. Strategy's volatility, he said, creates liquidity and demand for what he described as digital credit instruments issued on top of its Bitcoin holdings. On the broader market structure, Saylor downplayed the idea that miner economics create a firm price floor, suggesting that bank lending and Wall Street credit products will play a larger role in shaping Bitcoin's next phase. Saylor declined to offer a 12-month price forecast, but said he expects Bitcoin to outperform the S&P 500 over the next 4 to 8 years. At the time of writing, Bitcoin is trading near 69,000 and strategy shares are roughly $135 a share in pre-market trading. And they talk about how much Bitcoin he bought last time. And I'm really hoping that somebody got a message to Saylor, don't buy Bitcoin Monday through Thursday because you're going to get hammered the following Monday morning. Just stop doing that shit, all right? On to South Korea, where a probe into Bithumb's, Bithumb's probes Bithumb after their $43 billion phantom Bitcoin payout. I don't know why Cointelegraph chose the word phantom, but there it is. South Korea's financial watchdog opened an investigation into Bithumb after the exchange mistakenly credited hundreds of thousands of Bitcoin that did not actually hold to user accounts. Let's pause. Mistakenly credited hundreds of thousands of Bitcoin that it did not actually hold. Okay, so that sentence sounds like this. They didn't actually send the Bitcoin directly to users' own held wallets. They sent it as a credit, a ledger entry into their Bithumb account. So now it makes me wonder how the hell these people were actually able to sell that Bitcoin if it's just a mistaken ledger entry and there was no Bitcoin actually behind it. So when these people allegedly sold the 135 Bitcoin, which is what I remember them saying they could not get back yesterday, where was that Bitcoin just in a big old hot wallet for Bithumb? I don't know. Maybe we'll find out. So maybe we'll get some clarity here. The Financial Supervisory Service launched a probe into Bithumb for alleged platform violations around the erroneous crediting of billions of dollars in non-existent Bitcoin to user accounts. Okay, Yonhap News reported on Tuesday. Bithumb acknowledged the incident on Saturday, saying that the platform incorrectly paid 620,000 Bitcoin to users during a promotional event. While the exchange recovered most of the miscredited BTC, about 125 Bitcoin remain unsettled, raising questions about operational risks at centralized exchanges. Authorities point to multiple alleged violations by Bithumb. Although Bithumb said the incident did not result in any loss or damage to customer assets, South Korea's financial authorities have flagged its potential implications for the broader market. Quote, "We're taking this case very seriously," an FSS official reportedly said, adding that the FSS will take stern legal actions against acts that harm the market order. It almost sounds like a religious proclamation. We're getting so weird about all this. The regulator highlighted Bithumb's alleged violations, including mismatches between crypto held in its wallets and amounts credited to user accounts. The FSS also cited deficiencies in Bithumb's internal controls, noting that the error stemmed from a single point of failure. One staff member was reportedly responsible for the incorrect BTC crediting. Quote, "Paper Bitcoin concerns intensify. The 620,000 BTC were not real Bitcoin," crypto quant analyst Martoon told Cointelegraph, adding that the credited BTC existed purely in a virtual form and were visible only within Bithumb's internal systems. The exchange's promotional event, which was intended to reward users with 2,000 South Korean won, resulted in 2,000 BTC per user due to an employee mistakenly entering BTC as the currency unit instead of won, he said. Quote, "To put it into perspective, Bithumb currently holds around 41,798 Bitcoin in reserve, far less than the virtual 620,000 BTC that shortly existed on its books," Martoon said, adding that some users did benefit from the incident because around that time, 3,875 Bitcoin, or around 268 million, were withdrawn from the exchange. This may partly reflect users who managed to withdraw the mistakenly credited BTC, but it could also indicate a broader loss of confidence among other users. End quote. The figures reported by Bithumb are therefore lower than what the on-chain data suggests. Cointelegraph approached the FSS and Bithumb for comment, have not received a response yet. Bithumb's news aside, or rather Bithumb's news adds to growing community concerns over, quote, paper Bitcoin, or Bitcoin that does not exist on the blockchain but is traded on centralized exchanges or stock exchanges in the form of products like derivatives and exchange-traded funds. Some even suggested that paper Bitcoin, that paper Bitcoin, where the hell was I? Oh, some even suggested that paper Bitcoin trading has contributed to the ongoing market turmoil, with Bitcoin losing around 43% of its value since October of 2025. Well, that wouldn't surprise me. That's the end of the article, by the way. It wouldn't surprise me. This is, this is concerning. But it's not like we didn't know it was going to happen. We talked about it all summer long. Remember Paper Bitcoin Summer? All the treasury companies coming out of the woodwork like roaches. We all knew that at one point or another, we were going to be looking at a rehypothecation event. Several rehypothecation events. At minimum, several potential rehypothecation events, because at this point, it's clear that Bithumb has two separate systems working. They have Bitcoin blockchain, and they're keeping some amount of Bitcoin, like 48,000 Bitcoin, in actual Bitcoin that they can vector. They have control of that Bitcoin. It is real Bitcoin because it lives on the Bitcoin blockchain. It has to be vectored by using private signature or private key signatures. The 620,000 Bitcoin never existed at all. And yet, when it was doled out to all these users as part of this promotion, some of them were able to actually withdraw actual Bitcoin into their own wallets, and they've gotten everything back except about 135 or 125 Bitcoin. That's still a lot of Bitcoin. I'm sorry, it is. And even if Bithumb can cover it, it does not shake. It is not going to shake the FSS over in South Korea from saying, what are you doing? What are you doing over there at Bithumb? Hell, that's my question. What are you doing over at Bithumb? And that starts a very problematic discussion, a very uncomfortable discussion all over again when it comes to all of the exchanges. Tether, which is not an exchange, but that's part of the kind of the ecosystem. You know, what's going on with Tether. But moreover, Kraken, OKX, God forbid Coinbase. Coinbase scares the shit out of me because of stuff like this. Well, here comes Bithumb and proves, oh yeah, well, we've got like this ledger Bitcoin, and then we've got actual Bitcoin, and we made a mistake, and now we've lost some of our actual Bitcoin because, you know, shit happens. And that's probably why the FSS is looking at him going, what are you doing over there? Doesn't really matter. The whole thing makes me hungry for pineapple, freeze-dried pineapple, and freeze-dried peaches. You can get all of that and more at sats4snacks.com. That's sats, the number 4, snacks.com. Make damn sure you use code BitcoinAnd to get 2.1% off of your purchase at sats4snacks.com. Freeze-dried pineapple, freeze-dried peaches, freeze-dried mangoes, freeze-dried bananas, and freeze-dried strawberries. It doesn't matter which one you get. Freeze-dried fruit is freaking awesome. It's so much better than dehydrated fruit. The flavor pops. It's more crisp. The mouthfeel is much better. It's more of a melty feeling in your mouth than, I don't know, gnawing on a piece of rawhide. Because that's what I've always gotten out of dehydrated fruit. That's not what you're going to get at sats4snacks.com. Go to sats4snacks.com, order 5 packs of all of these delicious snacks, freeze-dried bananas, freeze-dried strawberries, mangoes, peaches, pineapple. It's all good. And it's my friend Sats4Snacks. It's Permanerd, but it's sats4snacks.com. Use code Bitcoin and make sure you get your 2.1% off. And it lets Permanerd know that I made a sale for him here on the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy said goods and services. You will buy them in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. Ray Dalio is not in the Circle P, but he is warning about CBDC privacy risks. At least he gets that. Atlas21.com brings it to you. Ray Dalio, billionaire and co-chief investment officer of Bridgewater Associates, has learned that central bank digital currencies will inevitably arrive, bringing benefits but also unprecedented government control over citizens' finances. During an interview on the Tucker Carlson show on Monday, Dalio stated, quote, "I think it's going to happen," end quote. Okay. All right. Do you think it's going to happen? That's fine. Dalio explained that CBDCs could prove attractive due to ease of transactions, comparing them to money market funds in terms of functionality. However, he warned about the downsides. They probably won't offer interest, so they won't be an effective vehicle to hold because of dollar depreciation. The manager then emphasized that all CBDC transactions will be known to the government, useful for controlling illegal activities, but also for exercising broad control in other areas. Quote, "There will be no privacy, and it's a very effective control mechanism by the government," Dalio declared. He warned that a programmable digital currency will allow the government to tax directly, establishing exchange controls. This will represent a growing problem, particularly for international holders of that currency, as the government can seize funds from citizens of sanctioned countries. Dalio also highlighted that one could be cut off from a CBDC if politically disfavored. However, President Donald Trump has opposed the idea of launching a U.S. CBDC. Shortly after taking office in January, Trump signed an executive order banning the creation, issuance, circulation, and use of a U.S. CBDC. According to the Atlantic Council CBDC tracker, only 3 countries have officially launched a CBDC: Nigeria, Jamaica, and the Bahamas. Another 49 countries are testing it, including China, Russia, India, and Brazil. 21 nations have a CBDC in development, and 36 are still researching central bank digital currencies. Yeah, this shit's coming. Ray's not saying anything that we don't already know here, by the way, but we should continue to trumpet these warnings. Now, here's my question. What happens if we do? What happens if this occurs? Let's say, I don't know, 75% of all the global countries end up with 100% CBDCs, and they're doing the worst possible things that you can do with the CBDC, realizing the very darkest side of all of our fears. You say something on Twitter about the president of your country, and all of a sudden, debanked, can't buy food, can't pay rent, can't do whatever, right? Your employer somehow is buddies with the government and understands that you like to drink beer sometimes, but that person is definitely non-alcoholic and looks at alcohol as a vice. Too bad, you're fired. Okay, so let's say 75% of the countries are working over our worst and darkest fears ever. And the United States is not one of them. The United States still offers just regular dollars. In conjunction with Tether, which I've talked about at length, we're going to be able to export those dollars. We already do, but it's going to really crank up. We're going to be able to export dollars because Tether is going to provide USDT to the world. They're going to buy U.S. treasuries, and the United States federal government is going to print at will. All of a sudden, those dollars become even more sought after because you can use those instead of your country's CBDCs. If the United States ends up being the last country standing that does not allow a CBDC in the country, that will be the death knell for all fiat currencies on the planet. If the United States does get a CBDC, well, then that entire story changes, and I don't know what it looks like. So, what's the best interest of the United States federal government at this point? To not have a CBDC. You literally are letting the rest of the countries of the world give you the best marketing plan you could ever have in your entire life. I think, and it's not really a prediction, but I have a really deep-seated feeling that the United States understands this at the highest levels of the administration and financial circles. And they are not going to use a CBDC. And they will tout the United States dollar as freedom money, just like we've been saying about Bitcoin. And they're going to lock their arms with Tether, and it's going to collapse fiat currency after fiat currency after fiat currency, and they're all going to fall into the dollar. It is an accelerant for the dollar milkshake theory. I have a deep, deep gut feeling that that's exactly what's going to happen. Let's run the numbers. CNBC futures and commodities. Brent North Sea oil trading down 0.4% to $68.76 a barrel. West Texas Intermediate down 0.6% to $63.93. Natural gas acting as the hedge today, 1.5 to the upside, $3.18 per thousand. Gasoline down 1.14 to $1.96 a gallon, and Murban crude down 0.63 to $68.95 a barrel. Metals are all getting kind of hammered today. Palladium is down 0.7, gold is down 0.5, still at 5,055 and 2 dimes though. Platinum down 1%, silver down 1.8 to just over $80 an ounce. Copper is down 0.87. Ag is fully mixed today, but the biggest loser is chocolate again, 7.36% to the downside. You want to talk about some volatility, man. Chocolate has been really volatile lately. The biggest winner in ag today appears to be soybeans. Nope, lumber up 1% today. Live cattle down 0.03%, lean hogs down almost a point, and feeder cattle down just over 0.5. And the indices are all in the green today. S&P is up 0.15. NASDAQ is in the green but moving sideways. The Dow is up over 0.5 point, and the S&P Mini is up 0.19%. Treasury yields are down. So the Treasury yields fall after soft retail sales. This is out of Trading Economics, and the yields on the 30 and the 10-year are important metrics to keep track of. So that's why I'm giving you this one. The yield on the U.S. 10-year Treasury fell nearly 5 bips to 4.16% on Tuesday, its lowest level since mid-January, after a weaker than expected retail sales report signaled a sharp slowdown in consumer spending, reinforcing expectations that the Federal Reserve will lower interest rates this year. Retail sales unexpectedly stalled in December, missing forecast for a 0.4% increase, while the core control group that feeds into GTP calculations fell 0.1%. Money markets are now assigning around a 25% probability that the Fed will deliver 3/4 point rate cuts in 2026, up from expectations of only 2/4 point rate cuts just 1 week earlier. Looking ahead, investors will focus on the benchmark employment report due tomorrow and the CPI release on Friday for further insight into the trajectory of the U.S. economy. Meanwhile, investors are also monitoring developments in China after reports that authorities have encouraged banks to reduce their exposure to United States treasuries amid concerns over concentration risk and volatility. China doesn't want to buy our debt. Tether will. The gentleman over at Tether will definitely buy the U.S. debt. China, not so much. They've been selling U.S. treasuries for a while now. They certainly haven't really been buying them. And now they've actually plunged below. I saw a graph. I think it's the UK as like one of the largest holders of U.S. debt, behind Japan, of course. And China and Japan for years, for decades, were the two largest holders of U.S. debt. And now China has actually crossed down below either the UK or the European Union. I can't really remember which. It's probably the European Union. They're, bigger. In either event, we're seeing the short end of the yield curve kind of being depressed right now. And it's not because the Fed is doing anything. This is all pure market saying what they think the value of the U.S. 10-year yield actually is. Right now, the 10-year U.S. yield is at 4.14 after a 1.3% drop, and the U.S. 30-year yield is down to 4.78% after a 1.4% drop. This is, just feeding the narrative that the Fed very well may have good reason to lower rates. Why is that important? Cheaper money, risk assets have a tendency to pump. And right now, it's been considered that Bitcoin is a risk asset. So that's why I'm bringing it to you. And at $69,740, we're chilling out at a $1.39 trillion market cap. We can only get 13.9 ounces of our favorite shiny metal rock, of which there are, with our one Bitcoin, of which there are 19,987,060.53 of, and average fees per block are nominal, 0.02 BTC, taken in fees on a per block basis. 45 blocks carrying 32,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priority is going to get you in at 1. And guess what? We are now back into zettahash territory. 1.02 zettahashes per second is the hash rate of the Bitcoin network at this time. And blocks are coming in at 8.9 minutes. We have a 12.12% difficulty adjustment. I think in 9 days is when that is supposed to occur. I'm sure that difficulty adjustment will actually change over time. But right now, blocks are speeding along. From abundance, strength, and tribe. Yesterday's episode of Bitcoin and I got progressively worse with 555 sats says, much love, Mr. B. No Cuomo. If you know, you know. Nostr Gang with a short row of sticks says, thank you, no thank you. Oak Grove with 1253 says, speaking of soap miner, I am now soap self-sufficient for 1 year. Bought that block of cacao while I still could and a package of Oshi Bites a week before. Really looking forward to sharing that. What service is it that I can tell the vendors at the farmer's market can be used for easier onboarding? That's a good one. In fact, it's the block. Hold on here. Block, Bitcoin onboarding. Let's see. I thought it was the block that they had some materials that you like some pamphlets and stuff that you could lay out to vendors. And of course it was selling Square because the Square terminal is part of Block. It's Jack Dorsey's outfit. I'm not seeing it in a general Google search under Block's Bitcoin onboarding, but I remember they had stickers and they had pamphlets and they had like little one-pagers that you could give to vendors on just how easy it was. Check out the Block and or Square. It's the same thing. Square is just underneath the umbrella company that is Block, which is Jack Dorsey's outfit. Check them out. See if you can find some materials. I want to move on, but I didn't want to just leave you out in the wind to twist on that one. Again, I remember seeing it from the block. It was a whole package that you could just, you go to a farmer's market, and it wasn't specifically designed for farmer's market, but it was explicitly designed so that new vendors could get onboarded to taking Bitcoin, and a farmer's market is perfect grounds for that. Kaz Peelan with 1021 says boost. Jay with 2100 says thank you. No, thank you. And Nick Dose with 146 says cheers. Richard Whitman with 200 says, did you enjoy the Slopper Bowl, David? I wouldn't know. I didn't watch it. I haven't watched that shit since Janet Jackson and her little wardrobe malfunction with that kid from whatever, what was it, Backstreet Boys or One Direction or whatever it was. That was a long time ago. Just, if you don't know what I'm talking about, just Google Janet Jackson's Super Bowl wardrobe malfunction. That's what they called it. That's what the news called it. Her top came off, showing her breast. Except, lo and behold, her nipple happened to be covered with some exquisite piece of metal-looking jewelry. It was all staged. It was all bullshit. And yet they talked about it for months. It seemed, well, at least weeks, but it seems like they talked about that shit for months. Whatever. I don't care. Mutum 8 with 1010 says, just want to say thanks for all the time and effort you put into your show. I appreciate that. That's the weather report. Welcome to part 2 of the news that you can use. CoinDesk starts us out. James Van Straten writing, U.S. Bitcoin ETFs register back-to-back inflows for the first time in a month. We're back, baby. For the first time in nearly a month, U.S. Bitcoin exchange-traded funds, or ETFs, have recorded back-to-back net inflows, snapping a redemption streak that stretched back into mid-January. According to SoSo Value data, the consecutive inflows shift began on Friday with $471.1 million in fresh capital, followed by another $144.9 million on Monday. This comes as Bitcoin bounced back from Thursday's $60,000 low to around $70,000. In mid-January, Bitcoin peaked near $98,000 after a 2-week rally that started at $87,000. The subsequent sell-off to $60,000 saw investors yank millions from these spot crypto ETFs all over the place. Broadly speaking, investors still appear confident about the cryptocurrency's long-term prospects, as evident from the spot ETF's resilient assets under management. According to Check On Chain, the cumulative assets under management of the 11 Bitcoin funds has only decreased by about 7% since early October, sliding from 1.37 million Bitcoin to 1.29 million Bitcoin. Bitcoin, meanwhile, is down over 40% since hitting record highs above 126,000 in October. I find this number hilarious. Of all the assets under management from the 11 funds that represent the spot Bitcoin ETFs, the amount of Bitcoin has only decreased 7% since early October. And if you remember, early October, specifically October the 10th, was when we fell from like around $125,000 per coin, and we started this long, arduous slog into the bullshit, right? So 7%. If it was only 7% of outflows since October the 10th, then who the hell was selling? Because I was told, I had it on good authority, that the ETF guys were selling out. But if only 7% of the Bitcoin left, then what the hell's going on? Could it be rehypothecation and the specter of paper Bitcoin summer? We just got finished talking about Bithumb. I think that this might actually have more weight into what's occurred since October the 10th, and not just Bithumb, I think a lot of the lesser tier Bitcoin strategy companies have been responsible. I think a lot of the lower funds have been responsible. I think exchanges are adding into this. It certainly didn't help that we just discovered that 620,000 fake Bitcoin, which is what it was distributed to Bithumb clients. I think this is more about paper Bitcoin than anything structurally wrong with the sentiment around Bitcoin. I don't know, man. I'm not as smart as this next dude, though. Vitalik, clearly a smart guy. Real smart. Let's see what bonehead maneuver this guy's got planned for Ethereum today. Vitalik Buterin calls for Ethereum-led alternative to the race for AGI. Vismaya V from Decrypt. This smells like desperation somehow. Vitalik Buterin is calling for a different path in artificial intelligence, one that rejects a blind, quote, race to AGI and instead relies on Ethereum-style decentralization, verification, and privacy as guardrails for the AI era. Quote, the frame of work on AGI itself contains an error, Ethereum co-founder Buterin wrote on X, noting that the goal is often treated as an undifferentiated race where the main distraction or distinction is simple, that you can get to be the one at the top. He compared the phrase to vaguely describing Ethereum as just working in finance or working on computing, saying it obscures more important questions about direction and values. Buterin said AI and crypto are too often approached from, quote, completely separate philosophical perspectives and urged builders to integrate them. Instead of raw acceleration, AI development should focus on systems that foster human freedom and empowerment and ensure that the world does not blow up, Buterin wrote, echoing his defensive acceleration, or D/ACC framework. Defensive acceleration, DAC, DACC framework. Oh, joy. Joni Pirovich, founder and CEO of Crystal AOS, told Decrypt, quote, Ethereum becoming the default settlement layer for AI to AI interactions is realistic. It's less about accelerating AGI and more about providing the necessary rails and guardrails for agentic commerce, trade, and investing. Trust and coordination, especially at the technology infrastructure and compliance infrastructure levels, are even more important now than ever. The comments land as major AI firms continue to publicly push toward AGI and superintelligence, with leading labs describing rapid progress in autonomous agents and advanced models. Buterin claims his alternative centers on safer, more verifiable infrastructure rather than larger models, outlining a practical roadmap in which Ethereum plays a central, though not exclusive, role. That includes local LLM tooling, zero-knowledge payments that let users call AI APIs without linking identity across requests, stronger cryptographic privacy, and client-side verification of AI services and attestations. Quote, using Ethereum as an economic layer for AI to AI interaction is also directionally correct, but it will live mostly on rollups and app-specific L2s, Midhun Krishna M., co-founder and CEO of LLM cost tracker ThinkAndOps.io, told Decrypt. Decentralized agent economies need programmable deposits, usage-based payments, and on-chain dispute resolution, Krishna said, adding that AI-augmented governance will require identity, reputation, and stake-weighted accountability, not just better interfaces. Vitalik grouped the Ethereum AI design space into four-part framework, illustrated as a 2x2 chart spanning infrastructure versus impact and survive versus thrive outcomes. God, it sounds like a mid-level marketing scheme to me. One quadrant centers on tooling for trustless and private AI interaction, including local LLMs, zero-knowledge payments for autonomous or anonymous API calls, cryptographic privacy upgrades, and client-side verification of AI services, TEE attestations, and proofs. Another quadrant positions Ethereum as an economic layer for AI activities supporting API payments, bot-to-bot hiring, security deposits, on-chain dispute resolution, and AI reputation standards, such as proposed ERC-based models aimed at enabling decentralized agent coordination rather than in-house platform control. A third focus revives the cypherpunk don't trust verify vision through local LLM assistance that can propose transactions, audit smart contracts, interpret formal verification proofs, and interact with apps without relying on centralized interfaces. The fourth and final quadrant targets upgraded prediction markets, quadratic voting, and governance systems. The comments echo a split that surfaced last year between Buterin and OpenAI CEO Sam Altman, who said his company was confident that it knew how to build AGI and that AI agents could soon join the workforce, while Buterin promoted crypto-based safety rails and coordinated control mechanisms. Why the hell am I bringing this to you? I'll tell you why. It seems to me that Buterin is starting to pivot the Ethereum ecosystem towards AI. Now, it sounds like he's like, oh, well, we're just going to use Ethereum for AI payments and be able to do verification processes. I don't think that that's what this is. I think that Vitalik is looking at everybody else jumping on the AI train and he's feeling FOMO. And instead of just striking out on his own and becoming part of that, he wants to pull the entire Ethereum infrastructure along with him, which is a very selfish thing to do, in my opinion. And I get the feeling that there's more to it than that. There's an underlayment in my gut feeling, and I always go with my gut, that he may start cannibalizing Ethereum itself into more and more of an artificial intelligence thrust. And while I'm not calling for the death of Ethereum, because I don't think this stupid son of a bitch is ever going to die, I wish it would. I really do, because it's been in our way forever. But I do think this results in a serious amount of confusion for the people working in and on Ethereum. I think it's going to cause confusion for the users of Ethereum. I think it's going to cause confusion for Vitalik Buterin himself in his path for his life. And I think it's just going to cause general problems because I sense FOMO. That's what I'm getting out of this. And it's a very dangerous game to play when you have that much control over a quote unquote decentralized financial system. I'm just saying, man, keep an eye on this dude, because I get the feeling that this isn't going to end as well as he thinks it's going to end. And if it's just as much as a Rube Goldberg machine that I've seen Ethereum, he's presented Ethereum in so many different ways with so many different kinds of roadmaps and charts and timelines. And it's just, when you look at it, it's like, what are you doing? Why do you have 12 different arrows pointing at 16 different things? This is a Rube Goldberg machine, and I think it gets worse from here. That's why I was bringing you this article. But now on to Tether, who's making a strategic investment into Layer Zero Labs, creator of tech used for USDTO. R.T. Watson writing for The Block. Tether, USDT, the world's largest stablecoin issuer, has invested in Layer Zero Labs as part of its support for interoperability infrastructure, according to a statement on Tuesday. Leveraged by Everdawn Labs, Layer Zero's interoperability protocol has been used to create the omni-chain version of Tether's stablecoin USDT. That cross-chain token, named USDTO or Zero, is a fully on-chain representation of USDT. Oh my God, it's a derivative. enabling the world's most used USD peg token to extend onto chains where it is not natively issued. The mind virus is spreading. This is a malignancy, by the way. And I'm not sure if... I don't really want to call Tether as being a malignant cancer. Malignancy is just a term I'm using to say, oh, it's not only jumped onto something like the Lightning Network. Now with this, it can go multi-chain and bring it all back into one controllable entity. It's sort of a malignant tumor. All right. It doesn't mean the death of the body necessarily, but it could very, very quickly get out of control. USDT0 tokens are minted using Layer 0's omni-chain fungible token standard and maintains a 1-to-1 backing with USDT. So USDT0 is backed by USDT, which is backed by the US dollar, which is backed by United States Treasuries. Am I getting that right? I see a whole lot of backing, and I don't see Bitcoin anywhere in here. And it's pissing me off because Tether knows better. Anyway, whatever. Since launching at the beginning of 2025, USDT0 has been used to execute more than $70 billion in cross-chain value transfers, according to Tether. And Paolo Ardoino, CEO of Tether, added in a statement that Layer 0, quote, has built interoperability technology that allows digital assets to be transferred in real time across any transport layer and distributed ledger, enabling a fundamental utility within the financial industry, end quote. The stablecoin issuers team believes Layer 0's protocol will help AI agents operate their own autonomous wallets and frictionlessly transact with stablecoins and digital assets at scale. Tether, which is likely the world's most profitable crypto organization, has been growing a diverse investment portfolio in recent years. That includes Tether saying last week that it had made a strategic investment in the T0 network, a USDT-powered settlement platform for licensed financial institutions. And then the company also recently invested $150 million in direct-to-consumer marketplace Gold.com. So Tether's malignancy marches on. We've been talking about cross-chain interoperability since I got into Bitcoin in 2015. All right? There's been several projects that have basically died on the fires of that. Was the ability to get Ethereum over to Bitcoin and Bitcoin over to Ethereum, and it just didn't really work that well. That's why we ended up with wrapped Bitcoin and wrapped Ethereum and all this other bullshit. But it was this multi-chain idea of all these chains connected together and operating sort of as a huge network, and each part of the network was in itself its own network. And on paper, it actually sounded like a good idea. Hell, before I knew what Bitcoin was versus what I figured out all the rest of the shit was, I liked the idea. It made sense from a topology standpoint. It's not a dumb idea. The problem is that each one of these sub-networks that would be bound together to make up a larger network, they're not decentralized. They all have actors behind them that have ulterior motives, or some of them are just retarded. I hate to say the word, but I mean just dumb. Just really dumb people. Because nobody can wade through that amount of white papers and survive. So what we're going to end up with is a huge network, and more than 95% of that network is just going to be stupid. And that's why all you really need is Bitcoin and the Lightning Network, eCash and Fediment, and maybe a couple of other things to do all this with. But no, Tether wants to, I guess, be able to operate everywhere all at once. From that standpoint, from a legacy business standpoint, that is not a bad idea. That's in fact exactly what they should do. But it just tells me that they're still operating under the auspices of all of the old models that have brought us to where we are. and look around you. Is where we are good as far as legacy business thought has given us? My answer is no. It's not good. Most people I meet are not all that happy. Everybody's concerned. Everybody's depressed. None of the kids are talking to each other unless there's a digital garden in between them. It's a bad situation. Fertility rates are dropping. Food is more poisonous than ever. We have to fight to go find clean food. Are you fucking kidding me? Why? Because the corporate infrastructure has basically just given us a bunch of slop. And they don't care as long as they're making money. I like money too. I don't think that there's anything necessarily inherently evil with it. But when you start taking a shit over human beings to get more money, then yeah, I got a problem with it. I do. I can't help it. It doesn't make me a communist. I'm not a socialist. Simply because I don't think we should be treating each other this way in order to make a buck. I think there's different ways to make a buck. If you happen to be one of the people that want all the bucks, like Jeff Bezos, I do have a problem with that. How many fucking water jets can you ski behind? How much art can you own? I mean, can you even view all the art in all the houses? How many yachts do you have? Can you go sail all these yachts? I mean, if you just have shit just to have, I've never understood that, and it still doesn't make me a communist. It doesn't make me a fascist. It doesn't make me a socialist or a Marxist or a Leninist. It makes me a human. The whole thing is fucking ridiculous. Anyway, France police arrest 6 people in a cryptocurrency ransom kidnapping case. Atlas 21 has it here. According to the AFP, French police have arrested 6 in connection with the attempted kidnapping of a 35-year-old magistrate and her 67-year-old mom, during which the kidnappers demanded a ransom in cryptocurrency while threatening physical mutilation. The operation concluded after 30 hours when the victims managed to escape without any ransom being paid. That is awesome. A magistrate and her 67-year-old mother escape a kidnapping attempt. Neat. The kidnapping took place during the night between last Wednesday and Thursday. The victims were found injured in a garage in the Drôme region on Friday morning, as confirmed by Lyon prosecutor Thierry Dran. The magistrate's partner, who was not at home during the time of the abduction, holds an executive role at a cryptocurrency startup, and the kidnapper sent him a text message containing a photo of his partner and a cryptocurrency ransom demand threatening to mutilate the victims if payment was not made and made quickly. The magistrate and her mother managed to free themselves by making noise inside the garage in Bourg-les-Valence, attracting the attention of a neighbor, who then opened the door and got them out. The arrest involved 4 men and 1 woman, with 3 people arrested during the night and 2 on Sunday morning. The prosecutors then subsequently confirmed that a minor was then arrested on Sunday afternoon, so a little kid was involved. The episode is part of a series of cryptocurrency-related kidnappings that have hit France since January of 2025. Dude, earlier than that, France was having problems in 2024. Let's be very clear about this shit. My husband works at a cryptocurrency startup, you say to a stranger at a bar. Don't do that. Don't do that. If you've got to say something about what your husband or wife does, say that they work in financial technology. Don't say cryptocurrency. Don't say Bitcoin. Just say financial technology. That makes you an automatic target. Even if you yourself cannot provide the Bitcoin on a ransom, you are going to be used as an object to get somebody else to do that. Stop telegraphing that you are potentially worth millions of dollars, please, for the love of God. And then also stop defrauding each other. When I was talking about walking all over each other for a goddamn dime, the United States has sentenced a fugitive to 20 years over $73 million of a crypto scam. However, they did it in absentia. Vismaya V, Decrypt.co, A U.S. court sentenced a crypto scam organizer to 20 years in prison for his role in a $73 million global fraud and a laundering scheme. But he remains a fugitive after fleeing electronic monitoring. A federal judge in California sentenced Darren Lee, a dual citizen of China and St. Kitts and Nevis, in absentia for his role in a global crypto investment scam conspiracy that U.S. prosecutors say targeted American victims through social media, dating platforms, and spoofed trading websites, according to a statement from the Department of Justice. Prosecutors said co-conspirators built trust with victims through unsolicited messages and online relationships, sounds like pig butchering, then funneled them to counterfeit crypto platforms or impersonated tech support agents to extract funds in a technique called pig butchering. Yep. The court also imposed a 3-year term of supervised release after Lee fled in December by cutting off an electronic monitoring device. So they had him and he got away, and then they sentenced him to 20 years, but they have no idea where this dude's at. Wow. Okay. Good on you, pal. Good on you. It's funny when courts sentence somebody that they don't have custody of. It's just funny, man. All right. That's it for today's show. I hope everything is well with you and yours, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.